Which economic reports are investors watching most closely right now?
Since we had the positive jobs report, it's definitely the inflation reports coming out now. And since the expectations are for rising inflation, that's a very significant because of the effect on interest rates. That's where the stock market, again, had this, for the NASDAQ, over 4% drop on Friday. If we continue to get high inflation numbers, then we're much more likely to get rising interest rates. I do want to say that a lot of this is negative. If you're a saver and you can get 5% at the bank, where there's a time we had higher rates, people may pull money out of the stock market and say, well, why should I take this risk if I can, still get a decent rate? So we've seen that in the past. So these rates can be very bad news, certainly for the stock market and also for the people who are using debt when the rates go higher, that for mortgage loans, car loans. One of my concerns is if you have inflation that's sticky, partly energy prices that are, again, driven by the situation of the Strait of Hormuz, and you end up creating other problems that slow down the economy. When this is getting back to the K-shaped economy concern that I've had, that at some point, if you know things get tougher and tougher and tougher for people because of inflation, energy prices, rising interest rates for car loans, mortgages, that's where you start to see an economic slowdown. Nobody is predicting a recession right now, but this is the kind of thing that you look at to see how it starts. And of course, the idea is if the rates go up, you're trying to quash the inflation, and that, of course, is very positive in the long run. But this is something that affects people terribly in the United States. The rising cost of living, affordability, and it seems like it's just getting worse and worse for a lot of people. So if we have rising inflation, those are to answer the question, those are the two reports that we're going to look at. And again, next week, there may be some comments from the Fed about this, depending on what the numbers are. And I'm going to be interested on the index of consumer sentiment on Friday, because despite the fact that it was so low and there's this expectation of it being a rebound, I'm not so sure about that. If people are still feeling very negative because of the Middle East situation, energy prices, inflation, that may still be reflected in the index of consumer sentiment. And that is considered a leading economic indicator, meaning forward looking. If people are concerned that the inflation is going to be higher, the economy is going to be worse, then they stop spending. And again, that's also been reflected in some of the corporate earnings, particularly on consumer durables, more expensive products like appliances. It's way too early, but you can see some trends. And that's where, again, we want people to be positioned if things start to go south. We have had 3 good years in a row in the stock market. And to get 4 good years in a row is asking a lot. Not every year is an up year. Right now, it's still been an up year, and the forecasts are still positive. But we see a lot of risk.